If you answer yes to even one of these 5 questions, your bank could freeze your account starting this month, and you might not find out until you're standing at the register with a card that just got declined. You do not need to answer yes to all 5. One is enough. Stay with me, because question 3 is the one almost nobody sees coming until the letter shows up in the mailbox 2 weeks after the freeze already happened. Before I get into the questions, let me tell you about a situation that plays out thousands of times a year, because it's the reason I'm making this video. Picture a woman I'll call Diane, living in Arizona in her early 70s. She logs into her online banking one morning to pay her electric bill and sees a message instead of her balance. This account is temporarily restricted. No explanation, no warning call the day before. Just a locked account and a customer service line with a 40-minute wait. When she finally got through, she learned her bank's fraud system had flagged a transfer she made to her grandson for his rent, a transfer she'd made every month for over a year. Because the amount had gone up slightly, and it landed the same week as a large deposit from her pension. Nothing illegal happened, nothing fraudulent happened, but her account sat frozen for 6 business days while she couldn't pay a single bill. Situations like Diane's show up constantly in consumer complaint databases, and most people who go through it never learn why, because banks are not required to explain themselves before they act. Keep her story in mind, because question 1 is exactly what happened to her. My name is Hank Mercer, and before we go any further, if this is the kind of information you want delivered to you before the deadlines arrive rather than after, hit subscribe right now and turn on the notification bell. What I cover on this channel tracks Social Security rules, Medicare updates, and retirement planning changes as they happen, because the rules do change, and the people who are subscribed find out in time to act. Now let's get into it. Question 1. Have you made a transaction recently that was larger, faster, or more unusual than your normal pattern? A big transfer, a wire, a new payee, or several withdrawals in a short window? If yes, you may already be sitting on a bank's radar without knowing it. Every major bank in the country runs automated fraud detection software that scores your transactions against your own history. It's not a person watching your account. It's an algorithm comparing today's activity to the last 6 to 12 months of your behavior. When something falls too far outside that pattern, the system doesn't ask questions first. It restricts the account first and asks questions later, sometimes days later. Under federal regulation CC, banks are allowed to place an exception hold on funds when they have reasonable cause to believe a deposit is uncollectible or suspicious. And that hold can run considerably longer than the standard next business day availability most people expect. For seniors specifically, there's an added layer. Since 2018, banks have been permitted, and in many states required, to delay transactions and report suspected exploitation to Adult Protective Services whenever a pattern looks like it could involve elder financial abuse. That protection is genuinely valuable when it catches a real scam. But it also means a perfectly normal large gift to a grandchild, a lump sum sent to help a family member, or a bigger than usual purchase can trigger the exact same freeze as an actual scam in progress. The action step. Before you make an unusually large or unusual transaction, call your bank first and tell them what's coming. A 5-minute phone call ahead of time can prevent a 6-day freeze after the fact. There's a second layer to this one worth knowing. Some banks also flag accounts when money moves in from a source they've never seen before, even if the amount is small. A new employer's direct deposit, a first-time payment from a government program, or a transfer from an account you've never used before can all register as new relationship risk in the bank's fraud model. That's a technical term inside the software, not something a teller would ever say out loud to you, but it's often the real reason behind a hold that otherwise makes no sense. If you're expecting a first-time deposit that's larger than your usual paycheck or benefit payment, giving the bank a heads up in advance costs you nothing and can save you a week of frustration. Question 2. Has your account gone quiet for a long stretch? No deposits, no withdrawals, no logins for a year or more? If yes, your state may already be watching that account and not in the way you'd hope. Every state has an unclaimed property law, and bank accounts fall squarely under it. The dormancy period varies by state, but 3 years of no activity is the most common trigger nationwide, though some states set it as short as 1 year for certain account types. Once an account crosses that line, the bank is required to attempt to contact you, and if they can't reach you or you don't respond, they are legally obligated to transfer the entire balance to the state's unclaimed property division. This is called escheatment, and it is not a scam or a bank overreach. It is state law, and it happens to an enormous number of accounts every single year, especially accounts that belong to someone who moved, changed their phone number, or passed away without the account being closed. Before escheatment happens, most banks will flag the account as dormant and restrict certain activity on it, which can look and feel exactly like a freeze, even though technically it's a pre-escheatment status. The fix, if this applies to you or a parent, is almost embarrassingly simple. Log in once, make a small transaction, or update your contact information with the bank at least once a year. That single action resets the dormancy clock in most states and keeps the account active and fully in your control. This one matters even more for anyone managing a parent's or spouse's finances from a distance. It's common for an adult child to assume a parent's account is fine simply because the statements stop arriving or go unopened, when in reality the account has quietly crossed into dormant status and is sitting one step away from being handed over to the state. If you ever do need to reclaim money that's already been escheated, it's not gone forever, but the process runs through the state's unclaimed property office rather than the bank. And it typically requires proof of identity and account ownership that can take weeks to assemble. It's a solvable problem, but it's a far more annoying one than simply logging in once a year. Question 3. Do you have any unpaid federal debt, back taxes, a defaulted federal student loan, or an overpayment from a federal benefit program? This is the one almost nobody sees coming until the freeze has already happened, because there's usually no phone call first. Through a program called the Treasury Offset Program, the federal government can direct your bank to freeze funds in your account to satisfy certain debts, and in some cases, can do this without a court hearing beforehand. The IRS specifically has the authority to issue what's called a bank levy, which orders your bank to freeze the funds in your account on the day the notice is received. Here's the part that surprises people. Federal law does require the IRS to send a final notice of intent to levy at least 30 days before this happens, and it must be sent to your last known address. If you've moved and never updated your address with the IRS, that notice can go to an old apartment while your account gets frozen anyway, because the mailing requirement is satisfied the moment it's sent, not the moment you actually read it. Once a levy hits, the bank is required to hold the funds for 21 days before sending them to the IRS, which gives you a narrow window to resolve it, dispute it, or set up a payment arrangement before the money actually leaves your account. The action step: if you know you have unresolved federal debt of any kind, don't wait for the notice. Call the IRS directly or contact the Treasury Offset Program call center and get ahead of it while you still have that 21-day window working in your favor instead of against you. It's worth knowing that certain federal benefits carry special protection even under a levy. Social Security and certain other federal benefit payments deposited directly into your account are generally protected from most types of credit or garnishment. And banks are required to check for 2 months of protected benefit deposits before freezing an account in response to a garnishment order from a private creditor. That protection is narrower than most people assume, though. It applies primarily to private debt collectors, not to federal debts like back taxes or defaulted federal student loans, which is exactly why question 3 focuses specifically on debts owed to the government rather than debts owed to a credit card company or medical collector. So here's what I want you to do. The benefits, the discounts, the assistance programs most seniors qualify for but never end up using. I pulled them all together in one place, broken down by state and by program, so you're not stuck searching through confusing government pages for hours. It's simple, it's fast, and any senior can find exactly what applies to their situation. Doesn't matter what state you live in, there's help out there you're probably missing out on. It's called the Senior Benefit Playbook, and it's sitting in the first pinned comment right under this video. Just tap it once, and you will have everything you need. Now stay right here, because the last one is the freeze trigger almost no one thinks to check, and it's the reason I made this whole video. Question 4. Is your name on a joint account with a spouse or family member who passed away, and the bank hasn't been formally notified yet, or has the bank received notice of a death anywhere connected to that account? If yes, you may be closer to a freeze than you realize. When a bank learns of a death tied to an account, its first move is almost always to restrict access while it sorts out ownership, even on accounts held jointly with a surviving co-owner who has every legal right to the funds. This happens because banks have to satisfy themselves about which state's rules apply, whether probate is required, and whether any other party might have a claim, before they release full access again. It gets more complicated when a bank receives a death notification through the Social Security Administration's Death Master file and mistakenly matches it to the wrong person. Something that does happen, particularly with common names or shared addresses. When that mismatch occurs, a completely living account holder can find their account flagged as belonging to a deceased person. And untangling that error typically requires an in-person visit to a branch with government-issued identification in hand. The action step: if a joint account holder passes away, contact the bank proactively with a certified copy of the death certificate rather than waiting for the bank to discover it independently through other channels. Since a freeze initiated by the bank's own systems tends to take longer to resolve than one you report yourself. Keep in mind that how an account is titled changes everything here. An account held as joint tenants with right of survivorship typically passes directly to the surviving co-owner outside of probate, and access should be restored relatively quickly once the bank confirms the paperwork. But an account held differently, or one where the deceased person was the sole owner and you were only listed as an authorized user rather than a co-owner, can end up frozen for months while it moves through probate court instead. If you're not sure how an account is titled, ask the bank directly, because that one detail determines whether you're looking at a short delay or a long one. Question 5. Has your bank sent you a request in the past year to verify or update your identification, and you didn't respond to it? If yes, this is the quiet one because it rarely feels urgent when it lands in your inbox or mailbox. Under federal Know Your Customer and Customer Identification Program rules, banks are legally required to periodically re-verify certain account holder information, especially on older accounts that were opened before current identification standards existed, or accounts that haven't had their information refreshed in several years. These requests often arrive looking like routine mail or a low-priority email, easy to set aside for later. But if the deadline passes without a response, many banks will restrict outbound transactions on the account, sometimes without a second reminder, as a compliance measure rather than a fraud concern. The account isn't being accused of anything. It's simply being held until the paperwork is current. The action step: anytime your bank asks you to confirm your identity, address, or account details, treat it the same way you'd treat a bill due date. Because from the bank's side, it functions exactly like one. These requests tend to spike after a bank changes ownership, merges with another institution, or updates its core systems, since all of those events typically trigger a full re-verification cycle across every account on file. If you've noticed your bank has recently changed names, been acquired, or sent you a notice about updated terms, that's often a signal a verification request is coming soon behind it. Watching for those signals ahead of time means the actual request never catches you off guard. Here is the complete summary. 5 questions, and you only needed one yes to be at risk right now. An unusual or larger than normal transaction can trigger an automated fraud hold, sometimes lasting close to a week. The action: call your bank before you send it, not after. An account that's gone quiet for a year or more can be flagged for dormancy and eventually transferred to the state through escheatment. The action: log in or make a small transaction at least once a year to reset the clock. Unpaid federal debt can lead to a bank levy through the Treasury Offset Program, often with a 21-day window before funds actually leave the account. The action: contact the IRS or the Treasury Offset Program directly the moment you suspect you owe. A death connected to a joint account, even a mistaken match, can restrict access for the surviving owner. The action: notify the bank yourself with documentation rather than waiting for their systems to catch up. And a routine identity verification request that goes unanswered can quietly restrict your account with no second warning. The action: treat every verification request from your bank like a due date, not a suggestion. None of these are rare edge cases. They are active policies at nearly every major bank in the country right now in July of 2026. I'll see you in the next video.